The dream of $0.1 for Shiba Inu is alive, but the path is paved with fire and whale movements. As the calendar flips to 2026, a massive burn event has shocked the ecosystem, signaling a renewed commitment to scarcity. But can this meme coin truly decouple from the fate of Bitcoin, or will the crypto titan at $87,880 be the only catalyst strong enough to push Shiba Inu toward that impossible milestone? We dive deep into the data. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The dawn of 2026 finds Shiba Inu in a state of quiet consolidation, yet poised for potential volatility. The asset is currently trading at 706 units, anchored by a market capitalization of approximately $4.16 billion. And a 24-hour trading volume of around $96.8 million. This price stability masks a fierce underlying battle between the token's immense circulating supply, standing at 585.29 trillion tokens, and the community's aggressive deflationary efforts. The primary challenge remains the tokenomics, where the sheer volume of tokens acts as a massive gravitational force, requiring extraordinary capital to achieve significant price movement. The broader market narrative is entirely dominated by Bitcoin, which is consolidating around the $87,880 mark. Historically, Shiba Inu's price action has been highly correlated with Bitcoin's trajectory, making the crypto titan's expected 2026 rally a critical factor. Forecasts suggest Bitcoin could surge to between $170,000 and $250,000 by March 2026. A move that would undoubtedly provide a massive tailwind for the entire altcoin market. However, for Shiba Inu to achieve its ambitious targets, it must demonstrate an ability to generate independent momentum through its utility and burn mechanism, a tension that defines its outlook for the first quarter of the year. The market is waiting to see if the recent on-chain activity is a sign of this decoupling beginning. The most significant development marking the start of 2026 was an explosive surge in the Shiba Inu burn rate, which registered an increase of over 10,728% in a single 24-hour period. This unprecedented event, documented by on-chain data, resulted in the destruction of over 172 million Shiba Inu tokens, permanently removing them from the circulating supply. The scale of this token destruction was highly concentrated, with a single transaction responsible for wiping out 171.68 million Shiba Inu. This massive coordinated burn is interpreted by analysts as a powerful statement of intent from key ecosystem stakeholders, potentially including the core development team or major community wallets. The burn mechanism is the ecosystem's most vital tool for addressing the supply issue, and a surge of this magnitude reinforces the long-term deflationary narrative. While the immediate price impact was minimal, the event has profound implications for scarcity. The community is now focused on whether this was a one-off, manual intervention, or the result of a newly optimized automated process linked to the Layer 2 solution. Sustained, high-volume burns are essential for Shiba Inu to overcome its supply barrier and validate the project's long-term vision. Despite the fundamentally bullish news of the 10,728% burn rate surge, the immediate market reaction was characterized by tempered volatility and continued consolidation, with Shiba Inu trading at 706 units. This lack of a parabolic price response underscores the market's current sensitivity to macro factors, primarily the movement of Bitcoin at $87,880. Technical analysis shows the price remains in a tight range, suggesting a standoff between speculative buyers and bearish exhaustion. The convergence of the 50-day and 200-day moving averages hints at a potential golden cross formation in the coming months, a technical signal that could trigger a decisive bullish reversal. Key resistance levels are identified at 750 units and 810 units, which must be broken to confirm a new uptrend. Analysts note that the market is currently in a holding pattern, waiting for Bitcoin to confirm its expected rally to $170,000 or more. The market's reaction to the burn was therefore not a signal of price indifference but rather a validation of the token's long-term structural health, with investors looking past short-term gains toward the project's deflationary commitment. On-chain data provides compelling evidence of strategic accumulation by large holders, commonly known as whales. In early December 2025, a single whale executed a significant move, withdrawing a staggering 169.13 billion Shiba Inu tokens, valued at approximately $1.5 million from a major centralized exchange. This action, spread across 6 transfers, is a classic indication of long-term conviction, as tokens are moved from centralized exchanges, where they are liquid for selling, to private, cold storage wallets, where they are held for investment. Further on-chain evidence reveals that non-exchange whale balances experienced a substantial jump of over 60% in the final 30 days of 2025. This sustained accumulation suggests that smart money is quietly positioning itself for the anticipated market surge, viewing the current price as an opportune entry point. This outflow activity is fundamentally bullish, as it reduces the immediate supply available for sale on exchanges, thereby decreasing near-term selling pressure. Combined with the New Year's burn event, these on-chain metrics paint a clear picture of increasing scarcity and strong holder conviction, despite the current price stagnation. Expert commentary confirms that Shiba Inu is at a critical juncture, its future trajectory inextricably linked to both its internal tokenomics and the external force of Bitcoin. Analysts note that the asset's price structure, while currently weak, is not indicative of abandonment, a sentiment strongly supported by the 60% plus jump in whale balances. This accumulation is interpreted as strategic positioning ahead of the expected Bitcoin bull run in 2026. The path to the community's $0.1 target remains a monumental tokenomic challenge. For Shiba Inu to reach this price, its market capitalization would need to expand by a factor of over 24,000, a scenario that is mathematically impossible without a massive, sustained reduction in the circulating supply of 585.29 trillion tokens. Therefore, while Bitcoin's surge to $170,000 or more will provide the necessary market liquidity, the ultimate success of Shiba Inu depends entirely on the aggressive, consistent implementation of its burn mechanism and the widespread adoption of its utility ecosystem. The Layer 2 solution. The analysis concludes that the utility provided by the Layer 2, which generates transaction fees used for burning, is the only sustainable mechanism capable of systematically reducing the supply over time and making the $0.1 goal theoretically achievable. The Shiba Inu community, the Shib Army, has responded to the New Year's on-chain events with a renewed sense of purpose and optimism. The 10,728% burn rate surge was the central topic of discussion across social media platforms, validating the community's long-held belief in the deflationary model. Influential figures, including the pseudonymous lead developer, have continued to hint at significant ecosystem growth and utility expansion for 2026. The narrative is firmly shifting from a purely speculative meme coin to a project focused on utility and deflationary tokenomics. The community's focus is now centered on the adoption and performance of the Layer 2 solution, designed to facilitate burns and utility. The Decentralized Autonomous Organization (DAO) is actively involved, with proposals aimed at increasing the transparency and efficiency of the burn mechanism. Specific utility projects, such as the Decentralized Exchange and the upcoming Metaverse project, are key points of discussion, as their success is directly tied to the transaction volume on the Layer 2 and, consequently, the burn rate. The collective sentiment is that the foundation for a major rally is being laid, and the community's role is to maintain pressure for utility adoption, reinforcing the deflationary cycle. The forecasts for Shiba Inu present a clear distinction between the short-term and the long-term outlook. For the short term, the next month, AI forecasting models offer a conservative projection. According to reports, a machine learning algorithm forecasts Shiba Inu trading at an average price of 729 units in early 2026, representing a modest upside of approximately 2.6% from the current price. This cautious forecast reflects the current market consolidation and the strong correlation with Bitcoin. A professional assessment of Shiba Inu must include a clear outline of the inherent risks, despite the positive on-chain metrics. The primary cautionary point remains the extreme volatility of the asset, which is characteristic of meme coins and can lead to rapid, significant losses. The most substantial structural risk is the sheer size of the circulating supply, which, even after the massive New Year's burn, still stands at 585.29 trillion tokens. Achieving the $0.1 target requires burning trillions of tokens monthly for years, a rate that has not yet been consistently demonstrated. Furthermore, the real-world utility of Shiba Inu remains limited. According to reports, only approximately 1,110 businesses worldwide are willing to accept the token as payment, a low adoption rate that limits its fundamental value proposition. This reliance on speculative trading, rather than intrinsic utility, makes the token vulnerable to market sentiment shifts. Regulatory risk also looms large, as governments worldwide grapple with how to classify and regulate cryptocurrencies. Meme coins could face increased scrutiny. Investors must maintain a neutral perspective, recognizing that while the whale accumulation and burn rate are positive signs, they do not negate the fundamental economic challenge posed by the supply. So as we close the book on this deep dive, the question remains, is 2026 the year Shiba Inu finally breaks free? The data is clear, whales are accumulating, and the burn mechanism is showing signs of life, fueled by a 10,728% surge. But the road to $0.1 is long, and the shadow of Bitcoin's $87,880 price looms large. Keep your eyes on the on-chain data, watch the Layer 2 utility, and remember that in the world of crypto, the greatest rewards come with the greatest risks. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.